Every move in chess has consequences, not just the one you're about to make, but the one it will lead to 5, 10, even 20 moves down the line. A single pawn, pushed forward without thought, can become a fatal weakness later in the game. And it's for this exact reason that chess is one of the most powerful simulations of money, investing, and wealth building ever created. Because just like money, the chessboard punishes impatience, it rewards long-term thinking, and it brutally exposes anyone who acts without a plan. If you've ever looked at someone who seems to build wealth almost effortlessly, while others seem stuck, making the same financial mistakes over and over, chess explains why. It's not about luck, it's not about genius, it's about seeing the board. By the end of our time here, you'll start to see your own money, your own financial future, the way a grandmaster sees the pieces in front of them. Let's begin with the most fundamental shift in perspective. Lesson 1. Think in moves, not moments. A beginner at the chessboard sees an opportunity to capture a piece and they take it. Their thinking stops right there. It's a moment of victory. But a strong player thinks in sequences. They don't just ask, can I take this knight? They ask, what happens after I take the knight? What is my opponent's response? And their response after that? What new weaknesses does this move open up in my own position? Money works precisely the same way. Most people operate in financial moments. The moment they get a bonus, the moment they see a sale, the moment they feel the fear of a market dip or the thrill of a hot stock. They make decisions based on how they feel right now, buying, selling, spending, without ever considering the second and third order effects. That shiny new car feels great in the moment, but the sequence of moves it sets off, the monthly payment, the higher insurance, the depreciation, the money that could have been invested instead, that sequence determines the real outcome of the game. Grandmasters win because they plan ahead. Wealth is built the same way, by thinking in years, not impulses. And this leads us directly to the next critical lesson, because being busy with your money doesn't mean you're actually winning. Lesson 2. Activity is not progress. Watch a novice play chess and you'll see constant motion. They move pieces for the sake of moving them, feeling like they have to do something on every turn. But watch a master and you might see them make a very simple, quiet move. Or they might spend long minutes just thinking, waiting. They are developing their position. They're improving the coordination between their pieces. They don't make a move unless it materially improves their situation. In the world of finance, so many people confuse activity with progress. They are constantly trading stocks, chasing the latest trend, refinancing their mortgage every time rates twitch. They make moves just to feel productive, to feel like they are in control. But wealth isn't built by frantic motion. It's built by deliberate positioning. It's about setting up your savings to be automatic. It's about creating a diversified portfolio and letting it sit. Strong financial players wait patiently for the high-quality opportunities, the undervalued asset, the perfect career opening, and then, only then, do they act decisively. The rest of the time, they let their position do the work. And once that positioning is right, the next lesson determines who actually survives long enough to win. Lesson 3. Defense comes before offense. In chess, a player who ignores the safety of their king gets checkmated, fast. It doesn't matter how brilliant your attack is, how many pieces you've captured. If your king is exposed, you lose. You always protect your king before you launch an all-out assault. In money, defense looks like an emergency fund. It looks like life insurance and disability insurance. It looks like diversification and managing your risk. These are the boring, unglamorous moves that protect your king, your financial core. Yet so many people skip defense entirely. They pour every spare dollar into speculative investments, chasing massive returns, leaving their king wide open on the board. Chess teaches a brutal, simple truth. You cannot win the game if you're not in the game. You can't build wealth if a single unexpected medical bill or job loss can wipe you out completely. You can't win if you're already losing. And if this is starting to shift how you see your own finances, if the pieces are starting to look like your savings, your debts, your investments, just take a moment with that. This shift in perspective is the first real move. Now here's where most people lose before they even realize a game is being played. Lesson 4. Trade-offs are everything. Every single move in chess is a trade-off. You move a pawn to control the center of the board, but you might create a weak square behind it. You trade your bishop for a knight, gaining a material advantage, but weakening your control of certain colored squares. There are no perfect moves. There are only better compromises. Money is exactly the same way. There is no free lunch. Higher returns almost always mean higher risk. The stability of a government bond means slower growth. The liquidity of a savings account means you're losing to inflation. Wealthy players understand this. They consciously choose their trade-offs. I will accept this level of risk for a chance at this level of return. I will sacrifice some growth for the security of knowing this capital is safe. Poor players, on the other hand, pretend trade-offs don't exist. They search for the get-rich-quick scheme with no risk, the perfect investment that does everything at once. They are looking for a move that doesn't exist on the board. And once you truly understand and accept trade-offs, your single greatest weapon becomes clear. Lesson 5. Patience creates advantage. So many chess games are not won by a single brilliant, dramatic move. They are won by quietly, patiently improving your position, one small move at a time. You wait, you make your structure solid, you slowly build pressure, and you let your opponent make the mistake. You let their impatience become their undoing. Money rewards patience in the same way, most powerfully through the force of compounding. Compounding doesn't feel exciting day to day. It's watching paint dry, until one day, decades later, it's a tidal wave. Those who can sit still, who can let their strategy play out over years and decades, often win without ever taking the big, flashy risks. They win because they simply outlast everyone else. But this patience should be not confused with hesitation, because timing is still a vital part of strategy. Lesson 6. Timing is strategy. In chess, the exact same move can be a stroke of genius or a complete disaster, depending entirely on when you make it. An attack launched too early, before your pieces are developed, will collapse and leave you exposed. An attack launched too late, after your opponent has solidified their defenses, will find the opportunity has vanished. The financial world works this way too. The decision to invest, to change careers, to start a business, to buy a home, these are all timing-dependent moves. The move itself matters, but when you make it can matter even more. This isn't about trying to time the market day to day. It's about recognizing the larger strategic windows of opportunity in your life and having the courage to act when your patient positioning finally meets the right moment. And this leads to one of the most misunderstood concepts in building real, lasting wealth. Lesson 7. Sacrifice creates power. The most beautiful moves in chess involve a sacrifice. A player will intentionally give up a piece, a rook, a bishop, seemingly for nothing. The amateur is horrified, but the master sees the truth. They are giving up something of lesser value to gain something of greater value, a commanding position, an unstoppable attack, long-term control of the board. In money, sacrifice is the engine of wealth. It looks like saving money instead of spending it on fleeting wants. It looks like investing in your education, sacrificing time and immediate earnings to drastically increase your earning potential for the rest of your life. It's taking a step back in your career to pivot to a field with more long-term growth. This short-term intentional discomfort is what creates long-term dominance. Those who are unwilling to make strategic sacrifices will spend their lives stuck, constantly reacting to their circumstances instead of controlling their own board. And now for the final lesson, the one that separates the amateurs from the masters in chess and in life. The final lesson is this: most games are won by mistakes. At the highest levels of chess, games are very rarely won by a single, unbelievable move of pure genius. They are won because one player makes one tiny, almost imperceptible mistake and the other doesn't. They are won because someone makes fewer mistakes over the long course of the game. Money works exactly the same way.
Building wealth is less about finding the next Amazon or Bitcoin and more about consistently avoiding the big, stupid decisions, avoiding catastrophic debt, avoiding get-rich-quick schemes, avoiding panic selling at the bottom of a market crash. Survival, consistency, and discipline will beat sporadic, reckless genius over time. Money, like chess, rewards those who simply manage to stay in the game long enough for their strategy to work. Chess isn't about moving fast, it's about moving smart. And once you truly understand that, money stops feeling chaotic and unpredictable. It starts feeling strategic. It starts to look like a game you can actually win. And if chess can teach us this much, just wait until you see what a game like poker teaches us about money. But that's a lesson for next time.